Everybody knows what is bank reconciliation, but I just wanted to ensure that what we are doing in bank reconciliation and how it will impact your balance sheet is also important to know. We shouldn't be just doing bank reconciliation just for the sake of doing it, but we also understand what bank reconciliation help the company and the financial statement and someone who actually wants to read what is being done in that particular month or period for which we are doing the bank reconciliation for. Okay. So the major points or issues that I've seen while we are doing bank reconciliation, and I have also heard a lot of questions coming in while doing the bank reconciliation, are such as there are open transactions while doing the bank reconciliation. There are a lot of open transactions that we left while doing the reconciliation. We only match what we see in the bank and what we see in the books. When both of them matches, you just select all of them and then finish your reconciliation. What will happen is, for example, you have 5 different transactions, let's say for $500 that was coming in the bank feed or in the bank reconciliation, but you ignored because you did not find them in your bank statement, but you matched everything else. Okay, now your screen on the top right will actually show that you finished your bank reconciliation because it says 0 here. The moment you see 0, you will actually finish the reconciliation, right? But how this 500 will impact your bank or your books, this is something that we need to understand. There will be several reasons why we will have this here, but we need to understand first how it will impact the balance sheet or your P&L. So first we'll go with the balance sheet, right? So what the balance sheet will show, even if the bank balance was 1000, when you did the bank reconciliation, you put the 1000 rupees as well, and then you finished your reconciliation. Technically, your bank balance in the balance sheet should show $1000 or 1000 rupees, but it will currently show 1000 plus this 500. Irrespective whether you select them or not, it will still show in your balance sheet as an additional item. So that is what we call an unreconciled items. Technically, while we are doing the bank reconciliation on cash basis, 99% of the time when we do the books on cash basis, your bank balance should match with what you have in the balance sheet. Not only in the bank reconciliation, but what you see on the face of the balance sheet as well, because it is important. The only time that you will have a difference in the bank statement versus the balance sheet, the balance of the bank, is because of those reconciliation items. Now, there are several reasons that we can have reconciliation item. One, that could be avoidable or that is inaccurate ones. Those are that you have imported same transaction twice, that's a incorrect transaction, or you added a transaction with a wrong date. So you need to actually see what those two transactions are, or what are these that is covered in that $50 transaction. You need to go in, look for the detail, and then just either delete it or correct them. Once that is being corrected, it will automatically remove from your bank reconciliation and it will match, right? Now, what are the genuine or the correct bank reconciliation item will be? One, there are a couple of scenarios when those bank reconciliation are correct and accurate. One, either that you have issued a check to a vendor who has not cleared that in the bank yet. For example, I have to pay someone 1000 rupees and I issued them a check. Technically, in India, if you have issued them a check and that check gets bounced, then I have the liability to honor that check again, right? It is clear. And if that check bounced again, then the person who was supposed to get paid can actually file the case against you because of the dishonor of the check. So what the bank reconciliation trying to say to us is, the moment you issued a check, the bank balance should reduce by that amount, which is correct, right? Even if it is not being presented to the bank or it is not cleared in the bank yet and it is not went into the vendor's account, but still it actually left from your bank or from your hand. So your liability actually got reduced. So what you should be doing is the EP should be reduced by that amount and your bank balance should be also reduced. Now, let's say on 31st March, you issued a check for 500 and the vendor actually collected that check, but he did not present that check in the bank and he only did it on 5th of April. So what will happen on 31st March, when you do the bank reconciliation, that $500 transaction will not be coming in your bank statement, correct? but that doesn't mean that this is incorrect transaction. This is correct transaction. It's just that you actually issued a check which was not cleared in the bank. It was only cleared on the bank on the 5th of April. So when you go into the April month, you will select the transaction that was showing on 31st March, even if you already did the reconciliation for 31st March. In your balance sheet, your bank balance will be down by this number, even if the bank statement says, let's say 1,000, but your balance sheet will still say $500 because you issued a check, but it is not cleared in the bank and the bank does not reflect that transaction. When you go into April, then your bank balance and the balance sheet will always match because that check is now cleared and is also showing in the bank statement. Correct? So these are the reasons. One of them is this, issued the check but not presented. Second, sometime that you actually got a deposit from the customer, you presented it to the bank, but the bank actually took a couple of days to clear it. It is not necessary that the moment you present the check into the bank account and then it gets cleared. It will not happen, right? And then why it is important for us to record the moment we put the check in bank or we received it from the customer is because, for example, you got a check for $1,000 from a customer, okay, and you did not record it because it will be taking 3 or 4 or 5 working days to actually get that check cleared. But if you're not recording it, it will show as an open AR in your books. Let's say we have a reminder through QuickBooks that sends the reminder to the customer that you did not pay for that invoice. The customer will revert back that you already collected check. So it will not look good on us that we are doing our books incorrectly because we are not recording those checks in our books. So what will happen? We actually have to book that check in our books. The moment you do it, your account receivable gets zeroed or gets down and then your bank balance goes up, even if it is not there in the bank statement yet, right? So when you get the bank statement, your bank statement will show amount which is less than 1,000 because it is not cleared yet, and then you will still go ahead and do the bank reconciliation with that open transactions. It will clear into the next month, same thing will happen again. It will clear in the next month, you do the bank reconciliation next month and it will get cleared. So it is important for us to understand why that transaction which is still showing as open in bank reconciliation item is correct or not. So you need to decide that, right? And then now how we do it. So for example, we are doing the reconciliation for March 31st and you're doing it on the April 15th. By April 15th, you are also doing the categorization of all the April transactions. Now you have to finish your month end. So you go back and do the bank reconciliation for 31st March. So if you already did the categorization till April 15th, then what you will see is even if that $500 transaction that was there on 31st March, it will show a pop-up next to that transaction where you can see that this amount was cleared, and when you click on that transaction, you can actually see what was the date it was got cleared. So if it was cleared on 4th of April, you can see that there in that transaction itself. So that shows that even if it was there on 31st March, it got cleared on 4th of April. So it is a genuine transaction and we don't need to do anything. But when you see a transaction that is on 31st March got created, but it is not cleared in April, you waited, maybe it's possible that it took a month to get that transaction cleared. But when you went into the May month, you see still the same transaction.